Welcome to Shri Management channel. For those of you who are here for the first time, my name is Pramod Mukkamala and I have an academic background of Masters in Finance from IIM Bangalore. And by virtue of my profession, I am a tax consultant and a GST practitioner. Today, we are going to discuss about the differences between direct tax and indirect taxes. Direct tax is something which was being directly levied on the taxpayer and paid directly to the government by that person. So what it means? It means that, for example, if you're a salaried employee or if you're a business professional who is earning income as a or a revenue during the course of the year, you would be paying the tax on the income or the revenue you earn directly to the government. That means the tax has been directly levied on the person who is earning that income. And that person or the taxpayer is somebody who is doing that action of paying the tax directly to the government. So because of the directness in the nature, this is called direct tax. An example of the direct tax is income tax here. And the second important aspect of direct tax is the burden of tax cannot be shifted to the other person. That means if you are earning the income or if you're a company who is earning that revenue, you have to pay the tax on that and you cannot shift that burden to the other person. And the third important aspect of direct tax is progressiveness nature of the taxation. So what is meant by progressive here? Progressive means the tax imposed will be higher if you're earning higher income and then even there will be surcharges depending upon this tax slab you would belong to. So progressively as in when you are earning more and more income, the amount of direct tax which you have to pay would be increasing. That's called progressiveness of the taxation. That means if you're economically rich and then if you're having higher income during the financial year, you end up paying higher tax. So what's an indirect tax? So indirect tax is the taxes which have been levied on goods or services and the tax which is indirectly paid by the end consumer to the government of India. That means, let me take an example. In case if you're going to a coffee corner or if you are going to a Pizza Hut, you would be paying certain amount of tax apart from the price of that goods or services as a part of the bill. You might have observed it. Can be a service tax if you're going to a hotel, or it can be a GST. So this is the tax which has been levied on the goods and services. And finally, the end consumer, that means we would be paying to the government of India. So because it's indirectly paid by the end consumer to the government, this is called indirect taxation. So actually what happens or how is this process working? So the taxpayer at each stage is acting here as a conduit and finally the burden is passed on to the end consumer. So if you see in the picture here, the manufacturer initially pays the tax to government, but finally he would get a substantial amount of input tax credit and he would pass on that burden to the retailer and the retailer would pass it on to the end consumer. And finally, the end consumer is the person who is going to pay the tax to the government of India. How he's paying it? The end consumer would pay the price along with the tax to the retail store, and the retail store would have actually paid that part to the manufacturer. So in this conduit, each and every player is getting the tax credit, and finally the end consumer is going to bear the burden of the tax. Because here the end consumer is indirectly paying the tax to the government of India, the name indirect taxation here. And the most important difference or the third aspect of indirect taxation is regressiveness of the taxation. What is meant by regressive nature? That means if you see here, there were two persons, one of them is having higher income than the other, but both of them would be paying the same amount of taxation because they would be, in case if they're purchasing the same commodities or same services if they're enjoying from. That there is no difference between a person who is rich or who is economically challenged. Both of them would be paying the same level of tax in case of indirect taxation. Though it appears to be a little bit counterintuitive, the nature of indirect taxation is more focused on taxation on the goods or the services being consumed rather than the person's individual income. So as a summary aspect, if you look at it, there are three different clear-cut differences between direct and indirect taxation. In case of direct taxes, they are imposed on the taxpayer, whereas in case of indirect taxes, the taxpayer acts as a conduit, and finally the end consumer is the one who is bearing the tax. Whereas in case of direct taxes, burden cannot be shifted. Whereas in case of indirect tax, the burden is shifted from manufacturer to the retailer and finally to the end consumer. And the taxation nature is progressive in nature. That means if an individual is earning more and more income, there will be higher taxation rate in case of direct taxes. Whereas in case of indirect taxes, there is no differentiation. Whoever is the end consumer, be he a rich person or an economically challenged guy, in case if he's enjoying the same services or the goods, they would be subjected to the same level of indirect taxation. So that's the clear-cut differences. Hope you have got the concept clear. Do let me know if you have more questions and share and subscribe to this video. Thank you for watching.